5 ways to start a gas station business in USA. Ever thought about owning a gas station but aren't sure where to start? Today I'm breaking down the 5 ways you can dive into this lucrative business with real numbers to help you choose the best option for your goals. If you have ever wondered whether to build a gas station from scratch or buy an existing one, this video is for you. I'll be covering the 2 main paths to ownership: constructing from ground up or purchasing an existing one. With each option, there are specific models and pros and cons to consider, especially when it comes to assets, goodwill, and franchising. Let's break it all down with examples and numbers to make it easy. By the way, I have listed down all my personal projects on my website, Rizwan Shuja Business Investments and Coaching. Look it up in the description and let me know if you have an existing business that you are looking to turn around, or a real estate property that you want me to evaluate to build a gas station. Anyway, back to the topic. The first prime way of making the most money is by doing a land development project. Number 1. Now let's talk about building a gas station from scratch. One option is to construct a gas station from the ground up. While the route offers full control, it requires significant capital and expertise. The cost could be land acquisition, construction costs, soft costs, and it can total up to $3 million or more, depending on location and size. You will have to come up with 25% down of the total cost, and the rest can be financed by the bank. Operational costs. Initial operational expenses might be around $30,000 per month, including staffing, utilities, and bank mortgage payment. Net margins. Once established, you might see net margins of 15% of inside sales. ROI estimate, return on investment. With monthly inside sales of $150,000, a 15% margin yields $22,500 in net profit. However, due to high initial investment, it could take 3 years to recoup your starting investment and start seeing significant returns. Building from scratch is the most challenging path, requiring expertise in construction and reliable contractors. Unless you have experience and strong industry connections, this option might not be the best starting point. The second option is to purchase an existing private gas station, including the land and infrastructure. When you buy with property, you typically avoid paying a goodwill fee, as you are taking on full ownership. The capital costs include purchase price, which might range from $1.5 million to $4 million depending on the sales. Operational costs. Expect around $30,000 per month for operations, including staffing, bank payment, utilities. Net margins. Owning the property can lead to margins of 10 to 15%. ROI estimate. With monthly inside sales of $150,000 and a margin of 15%, you would earn $22,000 per month. This $22,000 would include the profits from gas, lottery, etc. This translates to an annual ROI of approximately 30%, which means that it could take a little over 3 years to recoup your investment money before you start seeing the profits. The third option is to buy or lease an existing private gas station's business on goodwill without the property. This means just owning the business, or you can say that you are renting or leasing the gas station from the landlord. Example costs. You will have to pay a goodwill fee of $400,000 for a station generating $100,000 in monthly inside sales. Operational costs. Monthly expenses including rent could be around $30,000, which would include utilities and payroll. Net margins might be 12 to 15%, depending on the goodwill cost and rent. ROI estimate. With a net profit of $10,000 to $14,000 per month, your annual ROI could be 25%, which means that it would take up to 4 years to recover the money you invested. Plus, you can draw a salary of $4,000 or $5,000 if you work there as a manager. In this model, you pay goodwill to take over a profitable business but don't own the property. You pay rent to the landowner, and your initial investment is lower compared to purchasing with property. Also, there is no bank involved. However, the landlord can ask you to leave after the lease term is expired. Normally, the lease is 10 to 15 years. Fourth option is subleasing an existing private gas station with no goodwill. just inventory. In some cases, you can take over a gas station without paying for goodwill, but the trade-off is much higher rent. Example costs. Initial investment might be around $100,000 to cover initial inventory and operational expenses. Operational costs. Due to high rent, monthly expenses could be $40,000 to $45,000. Net margins. Margins are lower, around 5 to 8%. ROI estimate. On inside sale of $120,000 per month, net profit might be around $6,000 to $8,000, leading to an annual ROI of 60%. You can recover your money in a year and a half. This option requires less upfront capital but results in slimmer profit margins due to high operating costs due to higher debt. Normally, the leases are short-term, like 2 to 3 years, and could be renewed at the time of expiration. However, the landlord can tell you to leave when the sublease expires. He will have to pay you for the inventory. Fifth option is buying a gas station franchise. Finally, we have the option of partnering with a major franchise such as 7-Eleven or Circle K, buying an existing one under the franchise umbrella. The key difference here is that it's partnership with the franchisor, and you need to adhere to their policies and operational guidelines. Also, in case of 7-Eleven, 50% of the gross profit is taken by 7-Eleven. However, you don't have to pay for the rent, property taxes, and utility bills. This means following their established systems, using their approved vendors, and following their branding and operational standards. Example costs. Franchise fee, which typically ranges from $250,000 to $450,000. You can call it goodwill or franchise fee or both. Operational costs. Monthly expenses include royalties or profit sharing with the franchisor, which can be up to 50% of profits, along with some regular operational costs. Net margins. After franchise fee and profit splits, margin might be 8 to 10%. However, the sales are much higher in franchise store as compared to private stores. ROI estimate. On monthly revenues of $250,000 and after a 50% profit split, you might net $12,500 per month. Annual ROI might be 25%. When I got my first 7-Eleven franchise, there was a lot of documentation involved. The franchisor closely examines your financial background and management experience. You have to follow their systems, such as using their inventory management software and purchasing from their approved vendors. While this limits some of your control, it also provides a structured system and brand recognition. Also, there's a lot of support from the consultants of the companies to help you sustain and improve your sales and profitability. If you are finding this breakdown helpful, don't forget to subscribe and like the video. It's a simple way to stay updated with more business insights like these. Conclusion. To sum up, there are 5 main ways to start a gas station business. 1. Build from scratch. It offers full control but requires significant capital and expertise. 2. Buying an existing gas station with property. You own the property and infrastructure, leading to higher margins but higher payments. 3. Buying or leasing an existing private gas station without property. It includes lower initial investment but involves paying goodwill and rent. 4th is subleasing an existing private gas station without goodwill. Much lower initial investment but no goodwill, just need money for the inventory. However, the rents are significantly higher, making the net profits significantly lower. 5th, buying a franchise. Requires following the company's policies and profit sharing with the company. In the end, for those new to the industry, I recommend starting by buying an existing franchise gas station. This allows you to gain experience under the guidance of an established brand. Also, there's a lot of operational support from the company. Once you have built up your knowledge and confidence, you can consider other options like purchasing a private gas station. Follow me and get in contact if you want to stay updated with my upcoming projects. The link to my website is in the description. Anyway, there are many factors to consider when buying a gas station. I recommend watching that video to gain complete information before you start your own gas station business, or get in contact with people who you know what they are doing. See you in the next video.